I only learned about Austrian economics through Bitcoin. I try to teach people about Austrian economics and try to get people to understand it more. But the reality is people don't care. I think that's also what we will talk about with digital credit. I think it's really a fight that we cannot really win right now with Bitcoin. I come to the sad conclusion that most people are not made for Bitcoin. Most people will never get into Bitcoin if you don't force them into it. There is a cohort of people that say, hey, I want to be at the forefront of digital capital. I want to be at the forefront of this new monetary asset that is arising now. And they will be into Bitcoin and they will accept like the volatility, they will accept the pitfalls of early adopters. But most people will either come into that space with products like Stretch or with products or later on when Bitcoin is more stable. Because I think truly that Bitcoin will be such a huge asset one day where it's very stable. I think this is something where in 10 years, in 15 years, in 20 years, if Bitcoin is not a $2 trillion asset, but a 100 trillion, a 200 trillion, a $400 trillion asset, it will be very stable and almost non-moving whatsoever and just like very slowly grind upwards. And it is this like high sovereignty, very high optionality, asset that you can save your money in, or it is your money. This is kind of how I look at it, which is kind of the sad reality of trying people to study Austrian economics and go down the Bitcoin rabbit hole and do all of those things. And then they come out of it and they're like, yeah, I don't like it. It's not too volatile. Like, oh, I bought Solana. I'm like, why did they send you down the Bitcoin rabbit hole and you come out with a shitcoin? And so I haven't given up on mainstream adoption. I just think mainstream adoption of Bitcoin looks different than romantic Bitcoiners might want it to look like. I think we have this romantic understanding of we will have Bitcoin, it's perfect, and everyone will just adopt it because they have no choice. I think they will have a choice, and I think they will adopt Bitcoin in many different ways. And those people that want high optionality, a lot of freedom, a lot of sovereignty, and all of those things, they will get into Bitcoin. But they already had 15 years time to get in there. They had already a lot of time to research that stuff. And so we probably don't have that many more individuals that can get Bitcoin at that point. We will still have like an enormous adoption level on the base layer, especially when someone comes into Bitcoin with Stretch, they might research Bitcoin more likely and they might actually get into Bitcoin. This is another thing that we can talk about today. Having those layers of Bitcoin like Stretch, like other things that then actually get people orange pilled because they are curious. Okay, I'm buying this thing, but like what is underneath it? What, like how can I maybe also have some exposure to there? Because I think everyone that is into treasury companies or products from the treasury company like digital credit, you 100% should also have an allocation to the underlying asset, Bitcoin. You should definitely have it. And I'm a very big self-custody maxi. I mean, MicroSeed is literally a self-custody. It's a self-custody company in a sense, because if you have self-custody, you should put your seed phrase on metal, and that's what we're doing. And so I'm very big on self-custody, and I really want people to do that. And I have a financial incentive to say so. But still, I think most people won't, because I see how people interacted with me the last 6 years and how hard it is for people to get pushed into self-custody. It's not easy. And I still think it's the most amazing thing that you can possibly do with your money, Bitcoin in self-custody, but it's just not for everyone. I think 95% of people want a very simple, convenient solutions, and they wanted to get their 5 to 15% return so they can be kind of riding with inflation or maybe a little bit outperforming inflation. And they're fine with that. You know, if you are okay with an asset that has drawdowns of 80+%, you're kind of a weirdo. I'm like, if you're completely fine with that and it doesn't face you, like it doesn't face us, it's kind of weird. Like we are not the norm. We are not the standard. We are kind of the outsiders. We are kind of that small portion of the society. Yeah, like a very small subset of the group of the society that is okay with their money going up by 5x, then going down 80%, and then going up like 10x again, and then we're going down 70% again. It is a new thing and very scary. And not everyone is built for that. If you're built for that, take advantage. Like, don't buy stretch. Buy Bitcoin, maybe buy some strategy, and like ride that wave the next 10, 20 years. That's the best thing you can possibly do. But 95% probably won't do that, even if we really force them to do it.
Yeah. So I wanted to ask you, because you dropped a lot of knowledge, and you planted a lot of seeds already into my head. But you were talking about volatility in the future. So this is like this. I hear people saying there won't be volatility in the future, and other people say there will always be volatility because it depends on how you measure it. Like, if you measure it in the US dollar, in fiat currencies, like Bitcoin is a stable system. It's maybe one of the most stable systems that people engineered. But like the US dollar or the fiat currencies are like unstable. The currency rate between those two currencies are like inherently unstable. How do you think about that?
I think no matter what you measure Bitcoin in, the volatility in US dollar, the volatility in euros, the volatility in purchasing power, no matter what underlying thing or index or asset you want to measure Bitcoin in, even like gold, the volatility of that Bitcoin will always go down over time. Now, this doesn't mean that we can have a short period of time where we have higher volatility than in the past, and then volatility continues to go down because maybe the US dollar is hyperinflating, maybe the euro is hyperinflating, maybe gold is having huge up and down swings, and that's why Bitcoin relationship to gold is volatile, but then it's more on gold. So I think Bitcoin in itself as an asset will decrease in purchasing, will decrease the volatility when measured in purchasing power. That's the best way I can probably say it. But this is still a long time because we had in 2012, 2011, 2014, Bitcoin was a 80 vol, 90 vol asset. We had like huge drawdowns with huge upswings. It was crazy to be in that time in Bitcoin. I was not there. I can only talk from the historical data. Now, we had huge drawdowns already from 2022. I think we went down from around 69K to around 16 or 17 or 15K. This is a massive drawdown, almost 80% of 477, something like that. Now we're down about 50% as of this recording, and people are already like crazy about it, and they're already like, this is horrible. This is like Bitcoin is dying. It's over. Like this is kind of the sentiment of Bitcoin right now. And I'm like, it's just 50%. Like just a couple of years ago, we had 70+%. We could go down further. We could go down to 20K, 30K, whatever, 40K. It doesn't look like that. I feel like there's a very strong resistance above 50K, 58 maybe, something like that. But we can definitely go down if it's not out of the ordinary. And so I think the crazy upswings and the downward drawdowns or the corrections, however you want to call it, are going to be less, especially now that the people that are coming into Bitcoin are more institutional, especially now that the underlying asset just gets to be bigger. Like if the asset has a total market cap of 200 million, it is it's a lot easier to move that 200 million than it is an asset to move that is 2 trillion. Imagine we catch up with gold, then we are like 30 trillion, 40 trillion dollar asset. Well, it's like a lot harder to move that because then we are 20x bigger than now. Imagine we are at 200 trillion. Like it will be very hard to move Bitcoin because a lot of money has to decide to buy in or buy out of Bitcoin at the same time. And there has to be huge catalysts. And also not only the bigger of the money, but also over time, as asset matures, people get more convenient with that and get more confident with that asset. And so people trust it more. And so people are less likely to jump out and jump in every time they hear some news. And so all those factors over a long period of time will get Bitcoin to be a lot less volatile and have a more stable course. Now, to be as stable as a Stretch, for example, it will take a very long time. We will have probably another 10, maybe 20 years of volatility in front of us before we get to a state where it's very non-volatile. Because Bitcoin has another 20, even like 30 years down the line of, let's say, 20% return, maybe 25, maybe 30% return, depending on what you're kind of looking at. And so if you have about a 30% CAGR, you have some volatility. It's not possible for an asset to return
to get there.
Exactly. Like you cannot expect an asset to have a 30% upwards movement in just like a straight line. It will go up like that. And so if you don't want that volatility, there are options now out there for you that still are better than your bank account or even better than your S&P 500 investment, because even the S&P 500 has quite some volatility in there, like Stretch, like other products. So, but I highly encourage people, especially if you're listening to this podcast, you most likely already are. But if you are right now aware in 2026 of Bitcoin, you might own Bitcoin and you are interacting with Bitcoin, please take advantage of that, because there are not a lot of people there. It's maybe 50 million, maybe 100 million people that understand Bitcoin, own Bitcoin, interact with Bitcoin, and are aware of Bitcoin in like right now, 2026. So you are, even with a small portion in Bitcoin, even if you have just $1,000 in Bitcoin, you are in a club that is very rare. And most people don't understand how rare this club of just having $1,000 or $10,000 or 100K in Bitcoin is, because not a lot of people will have even access to this base layer Bitcoin in the long run. It's also something that we can talk about, where how many people will have access in the future to main chain base layer Bitcoin. I don't think that many. Like there's not that much space for people to transact with. It's maybe like 1% of the population, maximum 5%, depending on how we continue developing the code also, and also some kind of improvement proposals. But the main point for me is the volatility will go down. Mainstream adoption will not happen on the base layer. And if you are now aware of all the things that I'm saying, have base layer adoption. like get yourself the seat on the base layer, and you can get fancy with strategy and with amplified Bitcoin and with maybe like borrowing against your Bitcoin outside of that. Be safe out there, but like you can get fancy with it and have your cash not in like dollars or euros, but have it in Stretch and Stream. This is all very fine, but make sure you have base level access to Bitcoin in 2026 if you are aware of what's going on right now.
Yeah, amen to that. So this is literally why I reached out on X to you, because I think the combination that you are representing as a person that is interesting in Bitcoin is like, I think you can, I don't know what the real Bitcoiner is, but like you're like a self-custody Bitcoin maximalist, but you're also interested in like the other side strategy. What are they doing? Just not only, I don't want to put words in your mouth, but just to learn about the space and what they're doing. So that's why when I read that on X, I asked you to come on to the podcast, because I think your journey is like the perfect way for my audience to hear about how you looked at strategy before you dove in, how you think about it now, but also the pros and the cons, because I've got this feeling on X that there's like this binary thing, like, or you're pro Bitcoin, self-custody, maximalist, or you're this suit guy, this Bitcoin treasury company, digital credit fanboy, and it's one of the other. But there's a lot of middle ground, and I really want to hear your story, the things you learned, and how you look at this topic. So can you start out what you thought before you started to learn about it?
Yeah, I think first of all, I want to address this binary thinking in the community, which I really hate, and I think is only there and visible on Twitter. I think people are more rational in real life. People are more rational on podcasts. They tend to be very extreme on Twitter. So there's this one extreme of you are a self-custody Bitcoin maximalist, which I count myself actually in. And then you say, I hate everything that has to do with Bitcoin, but it's not real Bitcoin, not real like base layer, self-custody Bitcoin with your running your own node and all of that. I understand it. I'm in that camp myself, but you also have to be open to the reality. You have to be open to what's going on outside of our small Bitcoin bubble. And you have to understand that there are interesting products and services around the ecosystem that actually might make sense in a way for ETFs, for pension funds to get access to Bitcoin, for someone that has something in an equity portfolio, have some strategy in there. And maybe you have better ways to actually borrow against your strategy than having to borrow against a Bitcoin. And maybe you want to have a cash reserve so you can buy Bitcoin when it's dipping, and you don't want to have that cash reserve somewhere in a euro fund or a dollar fund where you get 1 to 4%. For it, you maybe want to have it in a stretch or stream where you get 10%, 11%, 11.25 or something like that is the current rate for stretch. And so I see that side of like self-custody, Bitcoin Maxi, like you have everything in there. But there's a reality out there of equity markets, of digital credit markets that can have an interesting role in your portfolio that should not be discounted. And the other side is also something that I don't understand of like, just want to have strategy and I don't want to have to do anything with Bitcoin, because I have to question that a little bit of, if you fully understand strategy, you have to also fully understand Bitcoin. If you fully understand Bitcoin, you kind of have to have some for yourself.
Yeah, I agree.
Because you kind of have to have some access to the base layer, because then you see the freedom and the sovereignty and the optionality that Bitcoin, the asset, gives you. Why wouldn't you want that also in your portfolio? So like, I kind of, if you are binary on one side, I would encourage you to look at the other side and play with that. If you have 100% Bitcoin self-custody, maybe just open some brokerage account and try some strategy out. Like just like buy like one share of strategy and investigate and listen to the next earnings call. Like just like be curious, just be open-minded and just like see what's actually going on. On the other side, if you never had self-custody Bitcoin, like how the heck do you want to invest in anything related to Bitcoin if you don't even know how self-custody is done, how you run a node and all of like invest like $500 to do self-custody, run a node and put $100 in your own self-custody wallet. It's a no-brainer to actually get to know the assets that your company is holding. Like it's even if it doesn't make sense for you financially, it's a thing where you can educate yourself. So like binary on either side, I wouldn't recommend. And so and I actually looked at that way. I was very long in the other camp of having only self-custody Bitcoin. And I looked at, I think Chase Palmery, I've mentioned it all the time. Like I think his strategy pilled me because he casually mentioned, like why wouldn't the company with the most Bitcoin be the biggest company on planet Earth? And I'm like, okay, I have a hard time seeing any other company other than strategy getting to have the most Bitcoin. The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.